All right, welcome back, everyone. Today, we're doing something really cool. We are going to start at the absolute micro level, looking at just one single incredibly powerful candlestick pattern. And then we're going to zoom all the way out to explore the vast, sometimes overwhelming world of professional market analysis. So grab your notebooks, get focused, and let's jump right in.
Okay, let me hit you with a quick riddle to start things off. What exactly does a shaved head have to do with a stock market? I know, it sounds like the setup to a bad joke, right? But it's actually the literal translation of the Japanese word marubozu. And in the trading world, a marubozu is a highly specific, visually unmistakable candlestick pattern that completely lives up to its really peculiar name.
So here is our game plan for this explainer. First, the Marubozu candlestick. Second, how to trade it. Third, the Holy Grail fallacy. And finally, number 4, seeing the big picture. Let's get into Section 1, the Marubozu candlestick, visual anatomy.
So what is it? Well, a Marubozu is a candlestick that represents a trading session where the price just moves decisively in one direction. And the kicker? It has absolutely no, or maybe just tiny, barely there upper or lower shadows, which we usually call wicks. Because it doesn't have these wicks, it literally looks like it has a shaved head, hence the name. The absolutely crucial takeaway here is that a true Marubozu shows complete, overwhelming, undeniable control by either the buyers or the sellers, literally from the opening bell all the way to the close. There's no tug-of-war here. There is zero indecision.
Naturally, there are two main flavors of this pattern. On one side, we've got the bullish Marubozu. This happens when the opening price is the absolute low of the session and the closing price is the absolute high. The buyers completely dominated every single pullback attempt. On the flip side, we have the bearish Marubozu. Here, the opening price is the dead high and the closing price is the absolute low. In this scenario, sellers just absolutely crush the buyers throughout the entire session. This extreme emotional imbalance is exactly what makes this candle stand out like a sore thumb on a chart.
Moving on to Section 2, how to trade it, live market strategies.
Now you might be wondering, how do I actually use this? If you're looking to trade this momentum, there's a pretty straightforward, actionable system you can follow. Step 1 is literally all about patience. You absolutely must wait for the candle to fully close. Listen, a mid-session candle might look exactly like a Marubozu, but it can change completely by closing time. Step 2 is your entry. Traders typically enter on a breakout beyond the candle, or they patiently wait for the price to retrace and pull back toward the candle's midpoint. And finally, Step 3, this is non-negotiable, is your risk management. You place a stop loss below the candle's low for a bullish setup or above the high for a bearish setup. Because these extremes act as massive support and resistance levels, they're the perfect reference points to protect your capital.
But hold on, pause for a second. Context completely matters. You should never, ever rely solely on one single candle. A Marubozu stuck inside a sideways, choppy, messy range, it just doesn't carry the same weight as one that's violently breaking out of a clear trend. You always need to validate the signal. Look for higher than average volume to confirm real, undeniable conviction. Check your indicators, like the RSI, for momentum, or use multi-time frame analysis. Trust me, a daily or 4-hour Marubozu carries way more weight than a tiny 5-minute one.
Which brings us to Section 3, the Holy Grail fallacy, a reality check.
Trading educator Rainer Teo hits the nail right on the head with this stark reality check. He says, "There is no holy grail in trading. Japanese candlestick is just a technique. It is not a trading system by in itself. You know, it is so tempting to see a bold, wickless Marubozu and think, bingo, I found a guaranteed ticket to profit. But as Teo rightly points out, candlesticks are just tools. They help you make better decisions. They are definitely not some magic fail-proof formula." In fact, treating them like a holy grail is a massive trap because they have inherent major flaws. Teo outlines 3 big limitations here. First off, they don't tell you how the price actually moved intraday. Second, they are totally blind to the big picture or the long-term prevailing trend. And third, traditional candlestick patterns rely really heavily on market gaps, like an engulfing pattern needing to gap above or below a prior candle. But think about it. If you trade a 24/5 market like Forex, gaps basically never happen. That literally forces you to completely rewrite the textbook definitions of these patterns.
Let's actually drill down into that very first limitation. Ask yourself this: what really happened between the open and the close? When you're staring at a daily Marubozu, all you get is this solid, dense block of color. It tells you what happened momentarily, at the extreme start and the extreme end of the day. But it is hiding a massive,
Massive amount of data.
Think about all the hidden possibilities churning around inside there. Inside that single solid bullish daily candle, the price could have moved in a dozen different ways. Maybe it just marched straight up, steadily, all day long. Or actually, maybe the price aggressively dumped right out of the gate, shaking out all the weak hands before rocketing back up to close at the high. Or maybe it just chopped around, frustrating everyone, wildly consolidating for 7 straight hours before a sudden last-minute massive spike. A daily candlestick completely masks all of that chaotic internal volatility. It is literally just a momentary snapshot in time.
That perfectly sets up Section 4, seeing the big picture, zooming out.
Because really, navigating the complex, often brutal realities of market analysis requires heavy, highly sophisticated tools. Think of it like a sailor navigating the ocean with a sextant. Real professional technicians don't just stare at a single candlestick and take a wild guess. No way. They have to measure the stars, so to speak. They map out the overarching, long-term trends using a massive, multidisciplinary toolkit.
Just to show you exactly how deep this rabbit hole goes, consider what professional market analysts are actually studying out there. We are moving way, way beyond simple chart patterns here. They're analyzing trend systems using moving averages, Bollinger Bands, and volatility bands. They're diving headfirst into behavioral finance, unpacking stuff like prospect theory and perception biases to figure out how investor psychology actually works. They are calculating intense volatility measures using the VIX index, implied volatility, and options Greeks. They even study cycle theory, looking for mid-cycle dips and inversions. It is an absolutely beautiful, dense, and wonderfully complex universe of data.
And that's exactly why organizations like the CMT Association exist, to set the gold standard for this kind of rigorous, serious study. They recognize that truly finding the big picture trend, knowing for sure whether you're in a secular bull or a bear market, grasping the statistical significance of your backtesting, and applying a real scientific method to price data, well, that takes a tremendous amount of discipline and multi-layered analysis. It's not a guessing game.
So, look at how far we've come. We went from the brilliant simplicity of a shaved head on a single candlestick, all the way up to the advanced statistics and behavioral finance used in professional trend analysis. And that leaves us with one final, absolutely crucial question for you to ponder today. When you look at the markets, are you just relying on a single, momentary snapshot? Or are you finally ready to expand your toolbox and study the whole feature-length film? Thank you so much for joining me on this explainer. Keep learning, keep questioning, and I will see you next time.